Some people are not truly emotionally or psychologically suitable to own stocks, but I think there are more of them would be if you get educated on what you're really purchasing, which is part of a business. Warren Buffett says, "Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos." There is no doubt that Warren Buffett is the best investor globally. Since he gained control of Berkshire Hathaway in 1965, it has returned an average of 20% each year, which is double the S&P 500's annual return. In comparison to the S&P's 23,454%, Berkshire's stock has returned almost 3 million percent. Charlie Munger, Warren Buffett's longtime business partner and Berkshire Hathaway vice chairman, sums out the simple set of rules that have helped him become one of the wealthiest men in the world. It's important that we only deal with issues that we can comprehend. Once we've passed that hurdle, we need a company with some unique traits that set it apart from the competition. Then of course, we would vastly prefer a management with a lot of integrity and talent. We have to have a pricing that makes sense and gives a margin of safety, and for the reason that our ideas did not spread faster is because they are too basic, he says. Charlie seems to have a point. To begin, I'd like to make it clear that this four-step approach remains constant regardless of market conditions. In 2022, there's no denying that our investment will be complicated in the coming year by factors such as outrageously high stock market valuations, high inflation, and possible interest rate increases resulting from the latter. This year's stock market is overvalued. So how do we invest when everything is so pricey? It's what Warren Buffett has to say about that in this video. We may not have many opportunities to buy inexpensive stocks within our sphere of expertise this year, if you're an active investor. In the years ahead, we hope to move much of our excess liquidity into businesses that Berkshire will permanently own. The immediate prospects for that, however, are not good. Prices are sky high for businesses processing decent long-term prospects. Warren Buffett wrote in his annual letter to shareholders in 2019, "Prices for companies with good long-term prospects are sky high, but the immediate prospects for that are not bright." At the end of the day, Buffett is attempting to buy entire enterprises while we're just trying to buy a few shares. In the last year or two, he's had a difficult time deciding where to invest his money. However, he doesn't spend all of his money on overpriced equities, which is a cardinal mistake in the art of investment. When it comes to his money, he simply continues to accumulate it. During the third quarter of 2016, Berkshire Hathaway's cash reserves grew from over $84 billion to almost $149.5 billion. To be clear, buying and selling isn't the only way to generate money. Waiting is also a way. Be patient and avoid buying mediocre investments in an inflated market, because as Warren Buffett points out, you don't need that many excellent stocks in your lifetime. Don't get tempted into buying average investments. To be successful, you don't need a lot of great investments in your life, so wait for the market to provide you with a solution. As a result, active investment in 2022 will have to deal with this sad truth. There is, however, another investment method that Buffett routinely advocates to the world's most important people, which is passive investment. If you are merely dollar cost averaging and engaging in the stock market, you should continue to do so in 2022. The best single thing you could have done on March 11, 1942, when I bought my first stock, was just buy an index fund and never look at the headline. Never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm, let the tenant farmer run it for you, and pointed out that if you'd put $10,000 in an index fund, that in reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now, Warren Buffett said. The passive investor doesn't have to worry about trying to time their investments perfectly. You'll keep buying market tracking assets as part of your dollar cost averaging plan, whether it's raining hail or sun. You'll obtain the market's average annual return of 8 to 10% if you continue this strategy for decades and decades. Hence, Warren's advice to passive investors: don't worry about the market being high or low, just keep going. Always follow your approach, not the headlines or the charts. Stocks are your friend if you have an ultra long-term outlook. For long-term, passive investors, even if the market crashes tomorrow, that's not a tragedy. GFC, the largest financial catastrophe since World War II, took only 5.5 years to return to pre-crisis levels, and the market has nearly tripled since. Although the market is at an all-time high right now, the worst is yet to come. As active investors, we must remain patient and avoid making rash decisions, while passive investors must carry on, as usual, aiming for the average. Then there's the question of inflation, of course. As a result of our almost 7% annual inflation rate, and the likelihood that inflation will continue to be a major story in 2022, it's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis, while following a monetary policy of something close to zero. It's a fascinating time. We've never really seen what shoveling money in on the basis of what we're doing it on a fiscal basis, while following a monetary policy of something close to zero interest rates. And it is enormously pleasant. But in economics, there's one thing always to remember. You can never do one thing. You always have to say, and then what? Warren said in May 2021. Isn't it obvious that he anticipated inflation? Exactly like Warren Buffett stated, you can't just do one thing in economics. You have to ask, and then what? In order to succeed. The zero interest rates and money printing finally caught up to us. So, Mr. Buffett, what are we going to do about the rising rate of inflation? Buffett actually addressed this issue in 1982, which is a long time ago. The time when inflation in the United States was just beginning to decline after having soared to nearly 20%. The yearly letter from Warren Buffett to shareholders in 1982 outlined exactly what businesses we should buy during periods of inflation. Such favored business must have two characteristics. One, an ability to increase prices rather easily even when product demand is flat, and capacity is not fully utilized without fear of significant loss of either market share or unit volume. And two, an ability to accommodate large dollar volume increases in business often produced more by inflation than real growth with only minor additional investment of capital. First, he's referring to corporations that are able to raise prices without repercussions. Inflationary pressures are mitigated in this way. That being said, it's hard to imagine a corporation that can raise costs by that much without losing customers. Individuals will always hunt for a lower priced alternative even if you have a moat or a competitive advantage. Every time Apple raises their prices, it has no effect on their market share. As expected, the price of Coca-Cola products has increased. People don't move to other drinks, and Warren Buffett's two greatest investments right now are both of those things. You should focus on companies that have distinct advantage over their competitors while prices are rising, something that ensures that even if they raise prices, they will retain their clients and therefore their market share. Second, Buffett says, an ability to accommodate large dollar volume increases in business often produce more by inflation than real growth, with only minor additional investment of capital. As a result, organizations that are able to earn a large amount of cash without having to invest a large amount of money to do so. As a result, you'll want to focus on businesses with a very scalable business model. It's true that Facebook doesn't need to create a new app in order to raise revenue. They can simply increase the frequency of their advertisements. On the other hand, Ford must develop more facilities or require more workers to produce more cars to quadruple their revenue. That's a lot more difficult. Look for enterprises that can readily be scaled up in times of inflation to gain a competitive advantage. Finally, we'll discuss interest rates. When the Federal Reserve revealed it was considering 3 interest rate increases in 2022, what did Warren Buffett think? Interest rates, basically are to the value of assets what gravity is to matter. Essentially, and on Thursday, the United States Treasury sold some 4-week notes treasury bills, and it says average price 100.0000006 zeros. The Treasury received the money at zero, so you'd have this incredible reduction in the so-called super risk-free group, the short-term Treasury bill, and that is the yardstick against which other values are measured. I mean, if I could reduce gravity, its pull by 80%, I'd be in the Tokyo Olympics jumping, and essentially if interest rates were 10% valuations. How much so? You've had this incredible change in the valuation of everything that produces money, because the risk-free rate produces really short enough right now. Nothing. Buffett said. Because the stock market currently has a high valuation, this video from the May 2021 shareholder meeting explains why it is. Interest rates at zero have made it impossible for major money managers to make money by investing in bonds. Thus, the money they would typically invest in bonds ends up in the stock market. In other words, this is the dynamic Buffett was alluding to. What gravity is to matter, interest rates are to stock market valuations. Jumping is easier when the gravity is decreased, but it is considerably more difficult when the gravity is raised. The stock market is in the same boat. Because interest rates are so low right now, the stock market's value can readily rise. However, in 2022, we're likely to see a dramatic shift in the market's fortunes. It is expected that interest rates would rise in the near future, and the higher the interest rates, the more difficult it is to jump. Although the macroeconomic situation shouldn't affect your own personal investments, you should always keep that in mind when making investment decisions. It's not just worth noting that when new bonds become more tempting and interest rates rise in 2022, 2023, and so on, stock valuations may come under pressure, especially for overpriced equities. In other words, don't expect an apocalypse in the next few years, but be prepared for it. And that, my friends, is a sample of Warren Buffett's wisdom. which we may use to assist us prepare for the major investing issues that will confront us in 2022. Thanks for watching! Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.